one of the things that our AmCham and our fellow AmChams in the regions wanted to do was to convene public policymakers and private sector decision makers together to discuss the implications of the current tax system and changes to the tax system in a somewhat neutral environment, and see if we can do our best not only to avoid any major wrecks, but also to increase the chances that Central Europe will emerge from the current crisis in a stronger position for growth and prosperity in the future.
Numerous studies commissioned by major enterprises have shown that a stable tax system is one of the prerequisites of successful business development. Stability and predictability are two key characteristics that businesses expect of their tax system. Now, these two characteristics are essential to maintain a healthy business environment, to maintain healthy investment levels by business, which lead to achieving sustainable growth in the long term. And that is, Persuade ranks among the top taxpayers in the Czech Republic, with annual contributions of almost 5 billion Czech crowns. Now, there is one specific type of tax, indirect tax, which is rather challenging to understand the impact. As a brewing industry, we are subject to excise tax on beer. Now, let me spend some more time on this topic, since it was the change in excise tax imposed in a difficult economic situation that has recently influenced the development of the entire Czech brewing and related industries. Now, logically, it might seem that the increase in indirect taxes is a simplified measure to solve the problems faced by the state budget. A quick direct income from the public purse, for the public purse, and a relatively easy way to collect it. And in the case of beer, this is 100% foolproof, since tax evasion is not an issue in this area. However, the tax rate increase does not automatically mean an overall increase in income for the state budget. The whole system is interconnected, where everything relates to another tax and ultimately to consumption.
And the subject of this conference is how really we can do the tax policies in the Central and Eastern Europe better, how we can have a more robust dialogue between the industry and the, not only industry, but taxpayers and the government, on really better understanding the impact of these proposed changes, because reality is, and especially these days, when there is a panic how to react to the downturn, economic downturn, to the crisis. So sometimes really there is no proper process in place how to assess what would be the implication of those reforms. Politicians just make decisions, they quickly decide, and then later on we realize what were the implications. So this is hopefully a contribution also to this dialogue, and that is why also important to set this scene with the government panel.
I decided to present our Institute of Financial Policy proposal. So when the new minister comes, we are going to him to present, okay, if you want to make smart consolidation and if you choose the tax increases, which we are not, of course, we would prefer if he choose expenditure cuts, but unfortunately we think it's not possible. So we will present him portfolio of our options. And tax gap, I was told that actually this conference is also about this tax avoidance and so on. So we would prefer if a new government would be like smart and pro-growth oriented, so we will recommend them to cut expenditures at first, but realistically we expect there will be some tax increase. This was highlighted both by opposition and coalition parties that actually challenge is too high, and realistically in short run you cannot cut expenditures in smart way in short run.
What the business has to understand, however, I think, is that when we are talking with you guys, we are not talking, this is not a 2% discussion. There are other taxpayers, I mean other level taxpayers, who are in this discussion as well, actually. And they have to be involved in discussion, and in Hungary at least, they have to be involved into taxation as well. I think one of the biggest problems which we have in taxation, and if we could solve that, we could solve many other things in tax policy, is the inefficient tax collection, which I'm very happy that important topic of the today discussion. And this inefficient tax collection, at least in Hungary, is especially in the SME sector, in the self-employed sector. We have huge problems with VAT as well. If we could fill all these gaps, then I think this is the only chance to make our tax policy simple, stable, etc., etc.
Today we are almost at the end of preparatory works. In January this year we announced a tender procedure for implementing, building and maintaining the e-taxes system. We assume that the contract which will be granted for IT firm will last about 8 years. And finally, to show you what we are going to do in our e-tax reform, sometimes we compare ourselves to Nicholas Copernic. You know that Nicholas Copernic moved the Earth and stopped the Sun. And what we are going to do in our tax administration reform, we want to stop taxpayers, citizens, and we want to move tax administration.
First of all, we will, nothing can be done without reorganizing our structured tax administration and processes within tax administration if we get the new system. So we will try to use as much as possible of the new technologies, automate as many as possible processes, that in the future we will, again, use the information that is already in our systems to deal with the taxpayers, not to ask them to come to the tax office with every declaration, simple forms. That also goes with the central registers. I will show later. We will use the information which are already not only with the tax administration but also in other government.
First is compliance, cost reduction, and then countering the tax evasion, and last is, and very important in the current discussions, is contribution to the consolidation of the public finance. Currently in our country there is tax administration which administers income taxes, then there is social security administration, they administer social security, and there are health insurance companies, one government-owned, one there are seven private, and they administer the health insurance. And the plan is, or it's already legislated, it's already in the legislation, that all these competencies will be moved to tax administration.
Well, Hungary is in a completely different situation, as our tax income compared to GDP is very high. So I very much agree with you, and I also stand for decreasing expenditures, which the Hungarian government actually did. So in 2012, around 50% was the decrease of expenditures and increase of taxes, and hopefully for 2013 the ratio will be even more towards expenditures. Administration is something like the Hydra during Greek mythology. Like you cut 3 heads, then immediately 6 grows out. So you have to go there to burn them out, and then stand there because it might grow back for some reasons. So it is very, very difficult. You have to begin it in time. If you don't begin it in the beginning of the year, then there's no chance to do any restructuring in November and December. But there is a chance to increase taxes in December or November. So this is a very difficult, difficult field of discussions.
Then just quickly summarize what we could expect based at least on these on the unification of the rate. So there will be definitely something negative for the overall consumption and the effect on the demand side. But there are also some sort of positive and good measures which should not negatively influence the businesses sitting here doing their tax compliance right, because there will be measures taken by the tax administration primarily and together with the ministries to really do some more analysis and activities on identifying the tax gaps and providing proper measures how to tackle those. What you've heard also, a focus on identifying tax evasions, tax avoidance, and again by building additional capacity at the tax administration level, somehow going after those areas, and thus creating a more competitive environment for those businesses doing the business in the right way, which means paying taxes as well. There are also positive signs, at least what we've heard from Hungary. The Hungarian doctrine is a growth. So they are always trying to have that ultimate goal, not necessarily only collecting taxes, but stimulating the economy, achieving growth, which would then consequently result in more taxes, even some reduction of taxes, proposed 10% corporate tax rate, sounds now quite an opposite direction that many countries are thinking of. Just some sort of trends. What is something to be keen on is the reduction of the administrative burden by really modernization of the tax administration process, and this was something very common for all the parties.
Okay, firstly, the world is coming out of has come out of the depth of the recession, but that's the good news. The bad news is that the recovery is really very slow by historical standards. Particularly the advanced economies here, the industrial countries, the growth is still at a very, very low level. And the emerging markets have been bearing the world economy along, but the growth rate there is falling. Now, we are predicting here some pickup, but this is more a question of reversion to the mean, I think, than that we have any confidence that this rate of growth is going to pick up. I mean, the latest news has all been slower and slower growth. Just to be particularly cheerful on Europe, if we add here the Eurozone, we see that the Eurozone followed the trough of the industrial countries during the recession, but since then it has grown less fast, and it is already, we are forecasting a recession in the Eurozone, in other words, negative growth in 2012. And of course, we're always optimistic that the future is going to be much better, and so we've got growth in 2013. We've had 3 waves of fear. We had the Lehman crisis, where the volatility of everything went haywire. Then, when the Greek crisis broke, we got a second spike. And then, when the Eurozone crisis really got underway in the middle of last year, we got another spike. Since then, things have calmed down, and part of this must be due to the actions of the European Central Bank.
What are the drivers for these? The key one is evident. It's the debt crisis and the desperate need of governments to raise additional funding for state coffers. But there is a second driver, and that is what makes it complicated. These are the still worrying trends about obesity, still worrying while we have luckily some light at the horizon. These figures here, I don't go into details, but just as a principle, these figures come from a brand new report from the OECD 2 weeks ago, and show some decline in obesity rates in a couple of countries, including Hungary, Wales, Ireland, England, and Italy. So there are some good news, but of course we are far from having a comfortable situation in that area. So these 2 drivers, if you put them together, you can have interesting things, and this is what we are faced with in Europe with taxes.
You also, in today's climate, need to remember the tensions between countries who need to raise revenues, they need to increase their tax revenues coming in, and companies who need to ensure that their costs are kept under control. The companies, we've heard some today, they don't want to see their costs going up in the tax world, and states saying, well, actually, we need to balance our budget. And one way of doing that is to raise the taxes.
We believe the proposal discriminates against intellectual property and high-tech companies, and I'll get into that in a few minutes. And we believe it also diminishes the member state sovereignty, and I appreciate Tom's comments at the end there about the sovereignty of the countries. And once again, we believe the proposal discriminates against IP and royalties. And then, why? Why does it discriminate against IP and royalties? Tom mentioned there's a proxy to try to have some transition relief that provides 5 years of R&D costs. But when you have been in a jurisdiction for 20 or 30 years like Microsoft, there's all sorts of built-up intellectual property in various jurisdictions. So if you're a company whose primary asset is intellectual property, and you don't include intellectual property in the allocation formula, I think that's going to impact business decisions as to where you locate your R&D, where you distribute your R&D, your product, either in the cloud or physically. And I think that's going to be a big issue that, especially if the proposal is not adopted by all the member states, if it is by enhanced cooperation with 9+ states, I think the other states, the non-members, non-participating member states, will have probably more of an incentive to have companies locate their R&D facilities there. So I think location decisions will be an issue.
I'd very much like to thank the panel. We've ranged very widely from a specific case study of food taxes to a number of the initiatives that the EU has worked on and then focused back in onto the taxation of intellectual property in particular under the CCCTB. For a number of years at the EU level, direct tax was a pretty sleepy subject. There was not a great deal going on. That is no longer the case. And I think we can be fairly certain in part, looking at some of the slides that Mark Allen from the IMF showed us, because there are large revenue needs, because we need, governments at least, need to look at different ways to raise this. And sometimes it's a little easier to hide behind a larger figure and say, well, it's their fault. I think that we're going to see more initiatives at the European level, even as we hear more political complaining about issues like subsidiarity. So this is definitely going to be an area that we're going to continue to look at.
Overtaxation of companies is a huge incentive for tax evasion. On top of that, in my country, we have an overtaxation of labor. You heard probably about Romania, that the Romanian labor force is very well educated and cheap. Wrong. It is very well educated, but not cheap. The total cost, the total labor cost for companies is really huge.
Tax incentives by themselves aren't going to get you there. They are important, but if you offer great incentives, but you don't offer a consistently applied incentive or an incentive that's easy to understand, or it's here today and gone tomorrow, or you have all the incentives that you would like, but you can't get permits to do business, then it doesn't do any good.
The basis of the Slovak tax system, it was not really just to introduce the flat tax. This is something what was marketed and medialized, but it was much more. Thomas Nila, I think he's not here anymore, but he reminded me, he saw me, he heard me on a similar presentation a few years back, I think on an IFA event, and he reminded me that I was showing this book, which is a complete set of tax laws in Slovakia. So what they did in 2004, they really simplified the system, cancelled many taxes. I have a short overview, but what is more important, at that time many people were skeptic and many country representatives. When I gave a first presentation in Vienna on this topic in 2004, one of the Austrian panelists was smiling, laughing, well, this is too too simple, too trivial, you will not survive for a long time. Well, we have at least for the 8 years. We will see what happens with the economic crisis, but we have survived with an equal and fair tax system.
Why states offer incentives to entrepreneurs? It's the prevailing motivation is of the states is motivation to investors to locate their project in a given country or region or a city, or somehow motivate them to invest into some specific areas there. Quite often the authorities provide cash subsidies for creating new jobs, training, and more often we see some, I would say, more sophisticated definition of projects which will be eligible for incentives. Usually, if the project is in R&D or education or energy savings or something which is improving not just the company but let's say the whole country or the whole society. It increases competitiveness of the economy, then there are usually better incentives than for standard projects. Now, how was the situation in the Czech Republic? In the 90s, Hungary and Poland introduced quite generous incentives. The Czech Republic was the third in V4. We introduced pilot scheme in late 90s, and the law was introduced in 2000. It was provided mostly in form of corporate tax relief, but at some point of time there were also quite significant incentives for creation of new jobs and training of employees. It was a very significant stimulus for greenfield investments. We did a study where we asked the companies to fill some short questionnaire, and actually majority of greenfield projects was influenced by the possibility to get incentives before making the investment here. On the other hand, it was clear that expansion projects were less motivated by the fact that incentives are here, and they were more sticking on their current projects here and making expansion there. Some of them later also admitted that even the fact that it wasn't so big motivation factor for expansion, it was a very significant protection of the investment in the location here against moving, for example, to Asia.
I will summarize the discussion. From Croatia, we learned that it should not be used yet as a best practices case. That you need to have predictability in taxation. You should be careful how you tax labor if it's going to be one of your main selling points. And that taxes could be used to find ways to increase production in the country. From Romania, I think, we learned that you should not marry a tax advisor unless you're terminally ill. Yeah? Have no experience.
But you can try.
I think my wife would not be happy. He proposed that the countries in the region should cooperate on tax, not compete, and should adopt a position of neutrality instead of using tax incentives to compete for investment. And he made the premise that high taxes equals lower revenues versus higher collection costs, and that tax should be a tool of economic growth, not merely a way to sustain government, which I think you might want to write in a letter to the US Congress. Slovakia, simple low rates can increase revenues, which sort of reflects what Romania said, and you proposed 4 maxims, which maybe we could rename miracles. That taxes should achieve equality, clarity, convenience, and efficiency. And I would like to correct you on the fact that the Czech Republic copied the Slovaks' simple tax system. We took your simple tax system and made it complex. And finally, the Czech Republic, Jan proposed, said with the tax incentives to be careful of the prisoner's dilemma, which is also something that Dan mentioned, that countries compete with each other on incentives. They they narrow the tax base and make it very difficult for themselves in the area of tax revenues, and maybe they should be cooperating more on that. You should be careful if you have investment incentives and you want to reduce them or remove them, that your investment environment is ready, meaning that it's sustainable for further investment before you phase out those incentives, which was a lesson that I think we learned here in the Czech Republic, and that you should reshape the incentives to match the sophistication of the environment. For instance, in the Czech Republic, moving from assemblies to services and R&D. And with that, I would like to thank everybody for your patience today. I would like to thank everyone who presented, including the people from the governments who made the long trip here to present what they're doing.